Hey, good morning. Welcome to the morning brief. Today is Thursday, July 25th. And so, wow, we got some interesting stuff going on today. 8:30, we had advanced GDP quarter on quarter, which was 2.8%, which was way better than the 2% that was expected. So this is really interesting because that means the economy is chugging quite along very, very well. And you think the Fed's going to lower interest rates? This is the big question. So this throws some. It's a problem. Interest rates are probably going to stay where they are for an extended period of time because economy's doing just fine. Unemployment claims were less than expected, also very, very bullish. Now, the advanced GDP price index was less than expected. Not sure exactly what that means. But the core durable goods orders was positive. That's, again, good for the economy. But remember, core subtracts out a bunch of junk. Durable goods order month over month were actually down. Okay, so this is very convoluted, very confusing as to what that means. Core means when we take out the volatile stuff, everything's fine and it's 0.5. We add in all the volatile stuff, then we've got issues. Okay, so this is not good. This is good. Advanced GDP is good. Durable good orders, not so good. So got some real mixed stuff going on today. What else we got going on today? 10:30, we have natural gas storage. And that is it for the day for U.S. information. So moving on. We got an ugly day yesterday, and I want to highlight this because we've been talking about it for weeks. This little area right in here, which was a giant gap. There was actually volume missing here from the Fed back in June. That gap there has now, but that volume gap has been filled. Granted, it was in overnight activity, but you can see there is volume, so there is no gaps in volume anymore on that chart. I remember when this happened back here, I said, hey, at some point we're going to come back down and fill that gap. So we certainly did. Now, what's going on? We have a major low volume node that's right here around this 54.50 area, 56 area. That is a big area of, if we break through that, gets really ugly. We could easily go down to 54.24, almost 54.30. If we get a rally to the upside, I think we'll come back up to this band right here, which would be right around the 5,500 level. 5,500 level is a major level. If we could get above that and close above that, we might have a bounce. We might be reversing. If we cannot hold and get above 5,500, there's no reason why we can't go down even farther. What's weird is that this was driven by earnings. As I always say, fundamentals are always right. It's just when do they actually convey to prices. So yesterday we had Google and Tesla missing their earnings, and the market did not like the implications of that. And earnings have got to be very good to support stock prices up this high. And that was not the case yesterday, and I don't think it's going to be the case through earnings season. So we're going to have a negative pressure on the market through earnings season just because I expect earnings to be not as good as expected. That being said, this was a major spot to fill. We did fill it. Now we'll have to see whether it's going to bounce here and go back up. Honestly, the durable goods is concerning. The GDP is even more concerning when it comes to interest rates. It just looks like interest rates are not going to be lowered anytime soon. Now, we'll find out more information tomorrow because the PCE comes out tomorrow morning. Looking at the intraday inventory situation. So we had a big down day, and look, we barely negative by minus 600 contracts. So big move down, barely negative, barely negative. And you can see that after hours, they pushed that thing up quite high in after hour trading, the inventory. But we don't look at that. We only look at the close, minus 600. So these are correlated, which is good, but the fact that it had huge price movement and very little negative inventory is very concerning to me, as we've talked about before. Overnight action was approximately 39 points. So high volatility. Volatility is here to stay. Where is support and resistance? We have resistance back up near 5,500 at that 54.96-ish area. We get above 5,500. The next little spot of interest is that just above 55.15. I think it's going to be a stretch to get there. We'll have to wait and see. Where's support on the other hand? Well, 55.50 is a big area, and we want to be aware of 55.50. We break that, could easily go down. This area right here, 54.32, 54.20, 5400, of course, the whole number. If we break below that, 53.91.25. So we have support and resistance that are relatively close by, and we need to be careful. Stock Traders Almanac, 57.1, 57.1, and that means we have a slight bias to the upside today. We'll have to wait and see how that fills out. Remember to trade what you see, not what you think. Good news may not be good news for the market. Bad news may not be bad news for the market. You never know how the market's going to react, so no thinking. Just do what you see. Have a great day. See you guys tomorrow. Hey, thanks for watching the Morning Brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.